Welcome to another episode of Founders and Finance, where every episode we dig deep into the insights that shape financial success in Australia. We have the real conversations with business owners, investment experts, accounting professionals, and everything in between to bring you the real world stories and insider insights to understanding the financial world today. Whether you're a small business owner, an inspiring investor, or simply looking to strengthen your financial foundations, there's something here for you. I am your host, Ross Pocock, co-founder and financial advisor of Sternlight Financial. And today I am joined by Dwayne Anderson. Dwayne is the co-founder of Amiga Capital Mortgage Brokers. Since leaving the military, Dwayne has made it his passion to help everyday Australians secure the best deals on their homes and investment properties. On his downtime, he loves to stay fit, with often him riding over 100 Ks a weekend. How are you today, Dwayne?
Mate, I'm doing really well, thank you. Thanks for having me.
Not a problem. Thank you for joining me. Now, I know you have a bit of a military background, so I have to ask, how did it go from switching from the military to moving into the mortgage broking and finance world?
It was definitely a fair bit of a process. It wasn't the first thing on my mind when I wanted to leave the military. I think my mindset was more around adventuring and seeing the world. I got into some adventure tourism initially when I first left, and then progressed through a myriad of different roles. So I think I had this bright idea that I wanted to get into an industry where I could help people, but I've also fundamentally always liked crunching numbers. So I thought this finance industry and being a mortgage broker would be pretty much a marriage of the two things coming together. So.
Yeah, definitely. Now that makes sense. You'd definitely be crunching some numbers in the mortgage broking world for sure. And I'm sure there's plenty of stuff from the military that could tie you over in terms of structure and organisation in there.
Yeah, spot on.
Yeah, definitely. So now one question I often get asked, especially from my clients, is what is the difference between them going to the bank or them going to an actual mortgage broker? So is that a myth that you can break down for us?
Well, I wouldn't say it's a myth. I'd say it's a fact that there's definitely advantages of going directly to a mortgage broker over directly to a bank. As a mortgage broker, I've got access to a panel of multiple lenders. All of the interest rates that I'm seeing are the interest rates that the lenders are going to offer you if you go direct. Quite often, and maybe even better through my channel as well. So, it really, what it comes down to is assessing what the client's needs are. Some clients might have a requirement to have a higher borrowing capacity over maybe a cheaper interest rate, or vice versa. They might be fixated, dogmatic on the interest rates. And then I need to sort of pull things together, assessing different lending policies and making sure that there's things that are suitable for the clients. So, there's obviously a million different variables when it comes to people and, the different careers, objectives, and it's up to me to sort of work that out. So I think if you're going directly to the bank, you can lose out on policy, and that can even end up in applications being put through to the bank that don't go forwards. And that shows in your credit report, where I've got access to be able to see what those policies are that are suitable. And obviously there's the other things with the mortgage broker. I make the job way easier. It's a convenience thing, and you get ongoing support. So it's not just a tick and flick for us. We're going to be with you through the life of the loan. Doing those handy rate reviews and making sure that everything's operating the way that it should be.
Yeah, definitely. Look, I can attest to that in terms of no one wants to be talking to a bank. You never get the same person twice. The headaches that come with that. Going to a mortgage broker definitely makes life a lot easier in that aspect. And you can see when you talk about it, the smile that comes on your face. You obviously enjoy doing it. So I ask in that sense then, what would be your most rewarding or best outcome that comes to mind if you've got some sort of case study of where you've helped a client and really enjoyed what's come from that?
Yeah, plenty, mate, plenty. There's, whether I look at achieving a higher borrowing capacity or even lending for a client that said initially they couldn't achieve lending through other mortgage brokers as well. So getting wins on the board with those. But ultimately, I think my favourite cases are working with first home buyers. They're a longer process to get them to where they need to be, and there can be a few more intricacies, whether it's having conversations around what it looks like to have a deposit or the required deposit, working towards those goals, and then helping them achieve the finance to get into a property. So I think it's obviously every Australian's dream to buy a house to live in, to raise a family, and just to get into the market. So as far as helping people with first mortgages is one of the most rewarding. But I think providing solutions to clients. A lot of clients come to us with stories of limited borrowing capacities, or inability to borrow, and it's our job to obviously make sure that we can get that over the line, get them the result that they need.
Yeah, definitely. No, I can completely understand that. It's definitely rewarding when a client comes to you with a problem or just not knowing a direction where to go, and you can actually provide that solution to them fairly not necessarily simply, but you're seeing it inside and out every day. So rather than them spending weeks or hours on research, you actually already know the back end of those products. So you talk about first home buyers being significantly rewarding for yourself. Um, where do you see the trends are with the current market? Obviously, house prices have gone up. Do you can do you see that trend? Do you know how much they've gone up by in recent times and things like that?
That's an interesting one. I think you and I were discussing offline the Hare and Todd White reports that just came through. So from 2019 to 2024, Brisbane has gone up 81%. So from 2019 to 2024, which if we're looking at the median house prices, Brisbane was just around that 550 mark, and now sitting below just under a mil. So when you're talking about trends, the unfortunate thing is two incomes looking to purchase a first home might be priced out of getting into the standard, buying land and property close to the city. So, obviously seeing people buying or purchasing first properties further out, and also looking to, I suppose, buy or purchase townhouses or units to get themselves into the market and try and ride that capital growth wave.
Yeah, definitely. In terms of those townhouses, obviously, I see around when we talk Brisbane, you see them becoming more and more developed. Do you see that that's going to be more the way of the future in terms of when they're doing housing developments, knocking down old blocks and building multiple places in the one area?
Well, I mean, I'm not an expert in town planning, but I think if you're looking at the requirements of what Australia needs, and it's a bit of a combination of infrastructure and the need to be close to where you work. So I mean, we've got the added requirement of also needing water and electricity, and Australia is a pretty big place, so it makes sense to develop urban areas, which does look like knocking down properties and building multi-level dwellings, or more compacted, like duplexes or multiple properties in the one property. So and definitely seeing a lot more of that. I was listening to another podcast from a bloke named Matt Barry, and he was pulling up some really interesting statistics. Australia is actually building the second most housing of any developed country in the world currently. So that's an I find that interesting, and that is obviously based off of per capita and per house. So we talk about a housing crisis, but we're actually one of the countries leading the way with building these houses, which that can create a few questions as to why we're having a housing crisis or people having difficulties buying or renting. But I mean, that's probably another can of worms.
Yeah, definitely. No, as you say, everything on the news is talking about a housing crisis. So to hear that we're up there as one of the most progressive in that area within developed nations is quite incredible. In terms of that, then, where do you see, again, telling you to pull out your crystal ball here and look far into the future, Do you see a slowdown with the housing market in the next 5 years, 10 years, especially in Brisbane and other areas of Australia as well?
Well, I suppose as far as planning to build, I can't see there being a slowdown in the short term. I mean, a lot of the projects that are coming through now are applications that have been in for years already, and the amount of applications that are in currently, that's still great. So the slowdown, I mean, if it was to come, it would come after those applications that are currently in have ceased, or those projects have been completed. So I think in the short term, there's still going to be plenty of properties coming into the market, and if we're following with the same statistic as what we said before, with Australia being a leader of the pack or second in the world for construction, I dare say it's going to continue on that pace. Um, I suppose as far as the ability to purchase, I've got high hopes for next year. With some of the proposed rate cuts that are meant to be coming in. So I'm really hoping that can sort of help some of those first home buyers or people that might have been having some of the borrowing capacity issues. Hopefully that can help them move into the property market.
Yeah, perfect. And in terms of that, I think it was your company. I actually saw a post earlier with some of the banks, their proposals for next year of where they anticipate rate cuts to come from. So, it, do you expect it to be big cuts next year, or
Well, I think I like to have the image of a bull walking up a set of stairs, like one of those spiral staircases. Goes up, goes up. Actually, it's the opposite. So it goes down slowly, but goes up quickly. So um, yeah, so I think with the interest rates, you know, the drops that we'll be seeing, I can't see. I mean, the proposals, so NAB and ANZ and the other lenders, but NAB said they'll probably commence cuts from May 2025. Currently, the Reserve Bank, their interest rates are 4.35, and the progressive cuts through 2025 NAB are proposing we may get down to 3.1%. So, I mean, whether that's going to happen in the year or over a couple of years, that's to be seen. And I mean, that's the crystal ball stuff. And ANZ have a similar proposal. So ANZ believe the cuts are going to start in February, and they're going to progress down to maybe that 3.6 mark. So, whether that's going to all be achieved in the 1 year or whether that sort of spans over a couple of years. And I think, really ultimately, it's the Reserve Bank's charter to look at a few factors. Some of them, including, how well the economy is going, the inflation, and what the unemployment rate is. So they're the main things that they'll look at when determining the rate. So as far as the current market, you know, they're really focused on honing in on the inflation. So, as far as they're concerned, the inflation isn't dropping down to where they think it should be, but they are thinking around that, that February to May mark should be that the open door. But like every crystal ball, we don't know which way it's going to go, and I think it's really going to, be, dependent on what's happening with the reports that are flooding into the RBA.
no, definitely, and I think the testament on how quickly rate rises went up is an indicator of that crystal ball is not very clear sometimes. When the RBA originally said we're not going to see too many rate rises, and then they hit eight in a row, so it definitely isn't always clear. Well, before we wrap things up, I always like to give the listeners one piece of advice. So, if you had one piece of advice you wanted to give the listeners when navigating the loan market, whether that is purchasing their first home, whether that is refinancing, what would that be?
It's something that I've been thinking about today, actually, and I had a feeling we might talk a little bit about first home buyers. I've had quite a lot of first home buyers come to me over the last couple of months, wanting to look at what their borrowing power is. I'm seeing a really common trend of these individuals that have taken out personal loans to purchase cars. So my recommendation is, if you are wanting to be a first home buyer, come and have a chat to me first so I can work out borrowing capacities before you think about getting into personal loans and purchasing vehicles, because it does dramatically reduce or change your borrowing capacities. So if you're just curious, just come and have a chat. I'm always like to have an open door policy. A conversation is always free, and it could save you thousands or get you the ability to borrow thousands more.
Yeah, yeah, definitely. No, that's a great bit of advice. I do obviously see it in the finance world. Decisions made on a whim. I often say it can take you ages to build up a deposit or a savings, but it can take one poor decision to ruin the whole lot in one go. So I definitely see that. Now, with everything and with our podcast, our last segment is where we do plugs. So tell me, Dwayne, what would you like to plug this month? What do you have going on your side of the world?
Mate, we've got some fantastic refinance opportunities, especially if people have seen a bit of capital growth in their property. We've got current interest rates as low as 5.89% variable principal and interest for owner-occupied properties. If they're looking at around an 80% loan-to-value ratio, then it's going to be close to that 5.99 mark. But ideally, right now, if you don't have a 5 in front of your interest rate, you should be coming to talk to us. I'd be, obviously happy to have a chat, but ideally save you potentially a couple of $1,000s a year in interest repayments.
Yeah, perfect. That can't be any better than plug, as you say. I see it very often. People don't have that 5 in there, and they're waiting and sometimes waiting can cost them because it keeps getting pushed back, this rate drop. So, and on our side, obviously, shamelessly plug the show. Do not forget to like and subscribe. Go to your favourite podcast and give us 5 stars or whatever the good thing is. And if you want to reach out and if you have any questions about what we spoke about today or what we're talking about in the future, or you just have a query, please reach out to me at ross at sternlightfinancial.com.au. We would love to hear your questions. If you want to get a hold of Dwayne, you can reach out to him at Amiga Capital or contact myself and I will pass your details on to Dwayne there. Thank you for your time, Dwayne. I appreciate it.